Hi, everybody. Good evening and welcome to Managing Finances During Challenging Times. These are challenging times, and we have some experts that are here to talk to you about what you can do to make them a little less challenging from a financial standpoint. And before we introduce them, let's have a few words from our Mora Da'atra, Rabbi Weinstock.
Thank you, Avi. It's a pleasure to be on this webinar with, and I want to thank our panelists for taking of their time to share with us their knowledge and their suggestions and their experience in these challenging times. The impetus for this program was conversations that we've had among the COVID Recovery Fund Committee, a group of individuals who prefer to remain anonymous. I get to represent them. A group of members of our community who have a passion and dedication to addressing the short and longer term impact of this COVID-19 situation on the financial and economic well-being of our community members. And it has entailed thus far a fund that has been set up that we have solicited, and members of the Young Israel of Hollywood community have been generous towards. We have provided some emergency assistance allocations. And the next step that we'd like to do, we had reached out to a number of, to the entire Young Israel community, asking if people have areas of expertise that they'd be willing to share with people who are in need of some guidance, of some consulting, of some direction. And there was a lot of response. We have over 36 individuals from a variety of different professional backgrounds and experiences and expertise that are willing to provide some assistance and help out and talk with people who could use some guidance at this time. And what I hope is that after hearing from our illustrious panelists some general suggestions and answering some of your questions, if there is some follow-up or it jogs your memory about things that you in your particular situation would benefit from some guidance, please be in touch with me, Rabbi Weinstock, or the assistant rabbi, Rabbi Freiberg, who can connect you with people who are looking to help. Olam Chesed Yibaneh. The world is built upon chesed. Chesed is connecting those who have something to provide with those who are in need. It's a circle of life. People are on the receiving end at times. People are on the giving end at times. So please, we thank those who are on the giving end at this time that they're providing their resources, their expertise, and their time for people who may be in some need. And through this exchange in our community, through the fact that chesed is what builds a community and sustains a community, through this we can not only survive these challenging times, but thrive and become a stronger, more benevolent community to find the silver lining and to grow from these situations. And so may it be. Thank you very much.
All right. Thank you, Rabbi Weinstock. I'll give you just a little rundown of how this program is going to, how it's going to go. We're going to start off, I'll introduce all of our panelists, and each of them will spend a couple of minutes just talking about some of the problems that we face and ways in which to deal with them. A bit of a general nature, probably about 3 to 5 minutes from each of them. And then we'll start taking your questions. Now, some people have emailed me questions directly. I put it out there. If you send the email to me at avi@yih.org, that's avi@yih.org, as in Young Israel of Hollywood, then I'll ask the question to the panel when we do get to the Q&A portion, and I will leave your name out of it. Your name will remain confidential. I will not share it with anyone during or after this webinar. You can also type it directly into the chat if you're not so concerned with confidentiality, or if you have a name that no one knows who you are the way it appears on screen, that's all good. We don't need to know who you are. We just want to ask the question so that it can be answered for the people in the community to benefit from. And then at the end, we'll get a final thought from each of our panelists, and they will remain available to you going forward. So if you have a question you think of after this whole thing is over, you can just send it on over. You still have my email address, and I'll be happy to forward it to them, or you can send it directly to them. They're here to help. We're here to help. And so let's talk about who's here to help. We have with us Steve Jacoby, who has an accounting and a law degree and is president of a small investment firm and several for-profit early childhood learning centers across Broward County. He is a founding board member of Teach Florida and served over 20 years in leadership and board positions with several South Florida not-for-profit educational and communal institutions. We have Michael Hoffman, who is professionally known as Michael, and to many of those of you watching, you may know him as Mikey, but tonight he's Michael because he's wearing his professional hat. He's a partner at the law firm of Hoffman, Laren, and Agnetti. He practices in the field of bankruptcy law and commercial litigation. He graduated of Yeshiva University and the University of Miami School of Law. He grew up in Hollywood, where I performed at his bar mitzvah, and he moved back here with his wife and 2 children in 2010. Aaron Kurlansky is a principal at FM Capital, which is a full-service real estate finance firm. He is a Miami Beach native, and this is from his bio. I didn't throw this in like I threw it in for Michael. He worked for Avi Fryer at Camp Ruach in 10th grade. So I'm sure, Aaron, that shaped your life for business, meaning you decided not to go into the summer camp business and instead decided that something.
Yeah, I checked that one off my list very early on, I guess.
Right. So mortgages were more up your alley. So you know what? You're in the top left corner of my screen. I believe you're in the top right corner of everybody else's because of the whole mirror image thing. But either way, Aaron, why don't you start?
Sure. So thank you, everyone. Thank you, Rabbi Weinstock and the Young Israel. You know, even during these times, I think the shul has been doing an amazing job, and I think a lot of us feel even more connected probably than when we were going more frequently. So it's an amazing effort on everyone's part. So just to kind of set the stage with this COVID pandemic, you know, a lot of people like to compare it to last cycle, 2008, 2009, when we had a financial crisis. This cycle is a little different, and this way you can kind of understand from the perspective of the bank and of your mortgage holder and your lender. The last cycle was really a catalyst, was brought on by the banking system. Credit was too easy. There was too much leverage on it. Everything was over levered, and then things eventually collapsed in 2008, 2009. This time around, it wasn't our fault. You know, it wasn't the bankers, it wasn't the banks, it wasn't Wall Street. It was a totally unrelated pandemic that caused all this crisis. So just so you understand the mindset of the banks are just as confused as you are. So, you know, they don't really have solutions. Anytime we're on calls with a lot of different lenders, they're even saying to us, what do you think? What are you guys doing? We're like, we don't know. What are you guys doing? And it's kind of that ping pong effect where no one's really figured out what exactly to do and how long because no one really knows how long this is going to last and when the economic recovery is. Obviously, things seem to be moving in the right direction, but that's just to set the stage. You know, basically, I pulled up a statistic. There's about $4.2 million people that are currently in a forbearance, which is about 8.5% of all residential loans. So no one's immune to this. There's a lot of people in there. And right now, banks are just starting to set precedent of what to do. So, you know, with that being said, you know, just so you understand going in, the banks don't exactly know what to do. They're kind of following each other through it. But at the end of the day, they are trying to work with homeowners.
All right. Thank you. Michael, you're right below Aaron.
All right. Thanks for setting this up. thanks to the committee that set it up, Roy Weinstock, Avi. So the financial downturn, as I've seen it through my clients, has affected people in specific industries, in service industries, restaurant owners, people in the travel business, in the event planning business. And everybody's been affected, but the suffering has really been concentrated in those industries. And the individuals and businesses who work in those industries had jobs, had income up until the pandemic hit. Then it dropped off, and we're still kind of feeling that drop off. But there's a hope or expectation that it'll come back. There's a perception that it's a finite problem, that it's a problem for a specific period of time. Maybe we don't know exactly how long it's going to go, but it's for a specific period of time. So what we've been trying to do is help our clients manage through this gap period, through this period where their income is way down, but they have an expectation that it's going to come back or return at some point. So since I'm the token lawyer on the panel, I'll kind of give the legal perspective, or I'll give the perspective of what's been happening in court. And the reason it's important is because people who are going through financial distress should be making decisions, or one of the factors they should be considering is what are the legal consequences of missing a particular bill, or if they fall behind on a certain payment, what's going to be the consequence? And there's a whole different variety of remedies that creditors have. And that really should impact the decisions that people make. And I'll give 3 examples. Aaron spoke about mortgages earlier. Credit card companies. So credit card companies are offering, in general, deferrals to individuals and allowing them to defer payments for some period of time. It's unclear what's going to happen at the end of the deferral time and how long the deferrals are going to be for. However, if somebody's budget is in a really bad place and they need to skip a payment or default in a payment, the legal remedies of a credit card company are more limited. It's an unsecured loan. There's no collateral. What typically happens when somebody falls behind on a credit card payment is they'll get a demand letter, they'll get some phone calls. Eventually, it may transition into a lawsuit, but by the time the real consequences have to be faced, by the time there's a judgment in a lawsuit, you're really looking at 4 months, 6 months, 8 months, 12 months after the default. And so there's some time for your economic situation to improve in order to try to resolve that debt. And credit cards are generally easier to negotiate. And if absolutely necessary, they're easy to discharge in bankruptcy. So a credit card is something where the consequences of missing a payment are bad. It's not something you want to do, but if necessary, it has deferred consequences. A second category would be something like rent payments. So right now, evictions are paused throughout the Florida. Moratorium on evictions. Right now, it's extended through July. It's unclear exactly when it's going to be lifted. But and you should try to work with your landlord. But if you do fall behind on rent payments, once the eviction moratorium is lifted, the remedies can be swift. It does require filing a court case, an eviction case, but those typically resolve within 30 to 40 days. So rent needs to be, just because of the type of remedies that the creditor has, needs to be one of the last things you would consider defaulting on. And then also, I just point to auto loans and to auto leases. Creditors don't even need to go to court to enforce those loans. They can just repossess the car without a court proceeding, and there actually is no moratorium right now on those. So it's very important, to the extent possible, to the extent you're able to pay any bills, that your auto loan gets made current, because you don't necessarily have the time when things get better to catch up on those payments. So there are definitely a lot of issues. Everybody's situation is specific, and you should definitely consult with your lawyers, accountants, financial professionals regarding your situation. But that's just a kind of a primer of where things are looking now from a legal perspective.
All right, great. And now Steve Jacoby to open things up right before we go to questions.
Right, bachelor number 3. So I was named as the expert in budgeting, which is, I'm really not an expert in budgeting. I have a predisposition to cutting costs, doing things more efficiently, and deferring expenses. I refer to myself as a reincarnated depression survivor. It's just how I'm wired. Also, I don't do a great job of balancing my own checkbook, whatever's in there, and I often am overruled on budgeting in my own house by my better half. So take it for what you want. Third, I would like to mention, just as Rabbi Luzzatto says in Path of the Just, everything in this book you know already, it's just important to review. So a lot of my ideas, I think, will be things that you've probably heard before, but nevertheless, most of us don't follow those ideas. All right, so here are some ideas. Wants versus needs. I know, start rolling your eyes, I know. Always try to defer an expense if possible, because if it's really something you need, you'll even need it more the following day. I remember as a kid, 14 years old, sitting in shul, not between two men, talking in shul. It was an aberration, of course. And I remember listening to this conversation, and one said to the other, he said, we got a new kitchen. And he said to his wife, what's the matter? Kosher Central doesn't deliver to an old kitchen? You know, she didn't cook. But it's an example of you know, do you really need what you're getting? And recently, my daughter is now driving, is going to drive soon. I looked at my insurance. You know, I said, we have 2 cars, we have a lot of insurance. It's really expensive. I mean, I could see one day that maybe my wife and I will, you know, I don't drive that much. My wife drives off. Maybe we'll share a car, save, you know, a lot of money on insurance. And between Uber and Lyft and everything else, who knows? So the last thing is that there is a lot of government money out there that everyone should take advantage of. If you're able to get unemployment, most people probably know, but there's a $600 bonus from the federal government through July 31st. There are other things that are out there. Obviously, if you're a small business, you can get PPP. My business got that. It's very involved, but very worthwhile, and it's still available. And other things that I could suggest in general are just sometimes doing things less expensive. I remember some person in the community, one of the wealthier people, many years ago, they did an Evite for a bar mitzvah. And it was great. I was really happy because I felt like it made everyone else feel that they could also do that. And it was saving a lot of money. No offense to Rosa Vadia. And last, I just want to finish off with an idea about credit cards. If you want to make 18% risk-free, get some money and pay off your credit card balances. It's no risk and it's 18%. Of course, easier said than done. But I went out with somebody when I was in my 20s. She was an accountant and she had money in the bank and she ran these credit card balances. So she said, well, I feel more comfortable having money in the bank. I said, yeah, but if you don't pay that credit card bill, you ain't gonna have money in the bank. So it's just one of those things that if you can figure out a way, I know things are very tight, but if you can, it's a great way to have positive, instead of having negative compounding, which is sort of one of the most amazing things for people getting wealthy. It's one of the things about getting poor. And if you do have a credit card, Dan's deals. And anyway, if I can help anyone in any way, I'm available anytime.
All right. So I'm looking, I'm just responding to something real quick. I'm looking at the questions that have come in. And people started telling me questions already a couple days ago. And there's a running theme of forbearances in at least 6 or 7 of the emails that I received. The basics of what is a forbearance, what does it mean? But I did get one question that was a little more specific. So before I throw it out, I imagine I'm going to be pitching this one to Aaron. But let me give you the whole question that this one person sent in, and then I'll ask you to address the forbearance question. So this person writes, can you please go through the differences between forbearance and deferral of mortgage payments and how it can affect your credit or ability to refinance in the future or obtain a business loan? And then a follow-up question, if you're in a forbearance and have the ability under new legislation to apply for a loan modification, what steps should you take? Should you extend the forbearance from 90 to 180 days, then apply for modification to lower your rate? Or does it make sense to try to modify your loan right away? Now, I just threw a whole bunch of stuff out there that definitely has some parts that are Greek to everyone, but I know that Aaron will know how to bring it down so that we can understand it.
Sure. So the first thing is it's very important to understand the difference between a forbearance and a modification on your loan. All forbearance is a temporary stoppage of the bank is saying, okay, you're in a hardship. We're going to stop foreclosure and we're not going to do anything. We're going to pause. A modification is something much different. That's usually a longer term effect on your loan. So generally the forbearances that are coming through that are being offered are usually 3 months, and they're actually, most of them are going to end in probably July, maybe some in August. And the way that they're set up, which is not very helpful right now, and there's a lot of talks about it being extended and changed, is that they're going to offer 3 months of no payments and then a balloon at the end. That's great. That's better, I guess, than nothing, but it doesn't really solve your problem. They're talking about potentially taking some of it and then amortizing it over the rest of the loan or moving it out over 12 months. But aside from understanding what a forbearance is, the other important thing to understand is who your lender is and who your investor is of your loan. A lot of people have Chase, Wells, B of A, whomever as their servicer. That's the one that sends the mortgage payments. However, 99% of the time, that's not the investor that owns the loan. The investor that owns the loan, 70%, 75% of all loans under $510,000 are owned by Fannie Mae and Freddie Mac. You can literally Google, is my loan owned by Fannie Mae or Freddie Mac? You put in your name, your address, you can find out who it is. If it's owned by a government agency, Fannie Mae, Freddie Mac, or also Ginnie Mae, which would be a HUD loan, those are going to be the most flexible lenders. That applies to 75% of it. So even though your loan might be serviced by Chase or B of A or Wells, they have no skin in the game. They don't really care. They're getting paid a servicing fee every month to just collect payments. The investor is the one that sets the precedent. And so it's important that when you call your servicer and talk to them, if you can actually get them on the phone, you actually have an idea of what you're up against. So if you know that your loan is owned by Fannie Mae or Freddie Mac, you're probably in the best shape of all, because otherwise it's a little harder to nail down. So the short answer is there is, for most loans, there is a forbearance period that they're offering. They're talking about extending it further. As it relates to credit, technically, it's not supposed to hurt your credit if you're in a forbearance, meaning it's not going to adversely affect your credit score. However, what it might hurt is the ability to apply for new debt. So if you're in a forbearance and it shows on your credit as forbearance, it will not hurt your score. So if your score was 700 before, it will stay 700. However, a new lender you're going for a car loan, you're going for new credit for your business, or you're going for a new mortgage, they will potentially have an issue with the fact that you're in a forbearance. So the short answer is, if you need to take a forbearance, you should take it. If you don't need to take it, don't take it. The last thing is
if I can just ask a clarification on one thing you just said. If someone is in a forbearance today and that forbearance ends tomorrow, and the next day they make their payment, they start making payments again, and the next day they go for that car loan, are they going to run into that problem you just mentioned? Or is that only a problem if they are currently under forbearance?
So it's kind of up in the air. It's one of those things that I said at the beginning. It's all new to the banks too. It's kind of case by case. Technically, no. Potentially, yes. So there also might be a potential overlay on the rate. So for example, let's say for someone with never having a forbearance, they were giving you 5% rate, maybe they'll give you 6% rate because you had a forbearance. So they'll factor in a little risk. Technically, there should be no material adverse effect to you. However, practically, that might not be the case.
All right. Now, I did cut you off a little bit. Did you have one more thing you were going to say on forbearance, deferral?
No, yeah, the most important thing is communication. whether it relates to mortgage payments, anything, rent payments, talk to your landlord. Don't hide under a rock. It's not it's not anyone's fault. It is the situation. Everyone's fully aware of it. But call your servicer, talk to them, explain the options, and chances are you're gonna have to call your servicer 20 times, but you'll find someone competent potentially on the phone. And communication is really key.
I would imagine that would even go for the situations that Michael was mentioning about those that don't have to go through the court system in order to take action, like an auto loan. You call the bank, you call the leasing company, the loan company that holds the title of your car, and it's possible that just by getting on the phone, you'll be able to help yourself out at least a little bit. Steve, someone's asking, what government programs can I access, and how do I go about accessing them?
Well, yeah, I don't know if they are a sole proprietor or if they're in a business, they can apply for the PPP program. And if they are qualified for unemployment, which they might be even as a sole proprietor, they could get unemployment, and they can get in Florida up to $900 or $1,000 a week, back to when they became unemployed, or if they were underemployed, meaning they were making less than a certain amount of money. I don't know, it's about $370 a week. They could actually still get about $600-700. So I don't know their circumstances, but it would mostly be unemployment or the PPP program, which is basically a loan that is forgiven if you use it to pay for compensation. And there's a lot of particulars with that. And to a certain extent, up to 40% pay your rent if you're in a business, and other expenses like interest expense and insurance, some other things. So I'd have to know more to give a more precise answer.
Okay.
One other good program that's available for business owners are Eiu Loans. It's an economic injury disaster loan for businesses who qualify. It's an SBA. It's a loan that you apply for directly with the SBA, and there is an interest rate. It's not forgivable like a PPP loan, but there are no payments for 12 months, and then it's a fixed 3.75% interest rate over 30 years. So the payments are very low. So there are a number of clients of mine have applied for those loans, and it's kept them afloat. It's also not as restrictive as PPP in terms of how you can spend the money.
All right. Now this next question, I'm gonna toss this one to Michael, but I have a feeling this may go around the room a little bit to all three of you. A viewer wrote in, if one does not have enough funds available to pay their mortgage, student loan, or credit cards, should they try to pay as much of one as possible? And which one should they pay? Or, and which, okay, I'm sorry. Let me start over. I read that wrong. Should they try to pay as much of one as possible, and which one? Or should they pay a little to each, even if it's not enough to meet the minimum payment, just to show good faith to each debtor?
So the first thing is what Aaron said is before you miss any payments, you need to reach out to the lender. Most student loans, like mortgages, are owned and backed by the government, and there are generous extensions and forbearance offers being provided. They're also for credit cards as well. So you should never just miss a payment without communication first. But of the three that you just mentioned, your mortgage has to take priority, in my opinion. Your mortgage, if you don't pay it, your home could be foreclosed. And if you miss payments on credit cards or student loans, Florida has a homestead exemption that protects your home. Now, of course, every situation is a little bit different, but as a general rule, your mortgage should take priority over those other bills. Also, as I mentioned before, that if you really do fall behind on your credit cards and you can't pay them, they're easily dischargeable in bankruptcy. You can't discharge your mortgage. If you want to keep your house, you're eventually going to have to resolve your mortgage debt and make your mortgage payment. So my opinion would be you definitely want to throw as much money at the mortgage as possible.
All right. Did anybody else want to jump in on this?
I agree. I mean, was there a car payment thrown in there as well, or no?
No, the three were the student loan, the mortgage, and the credit cards. What would you say if the car payment was in there?
If there was a car payment, I would say they could take your car very quickly. So I don't know.
Yeah, I agree.
Yeah, I mean, I think I agree. You need to pay the mortgage first, because eventually it does catch up, and things happen once you start going into default, especially nowadays, and we saw it a lot in last cycle. Is defaulted loans get sold, and they get sold to investors who buy them for discounts, and they're looking to potentially own your properties. So you really want to stay in tight communication with your servicer, and make the mortgage a priority. The other thing is that I was just kind of talking to someone else recently. If you are in a holding pattern where you're not in the best financial position, but things, you feel that there are some headwinds, in front of you, rates right now are so low that, if you're at 4.25%, 4%, and your credits is fine, and you're still on your payments, but you're kind of teetering, you can, your rates right now are below 3%. So that could save money right away. That's a simple savings. If you've already defaulted and you're late, that's a whole different story, because that's hurt your credit. But if you're still employed, or you're still in business, but things are tight, and you feel that you're kind of just on the edge there, call your bank, call anyone. We could help you out also. But it's just something that, you could save 1% on your rates. It's hundreds of dollars every month. It's a simple savings.
Are you talking about refinancing when you say this?
Yeah, I'm saying if you're refinancing now, it's obviously you need to be in an okay financial position, but if you're self-employed, for example, they don't actually look at your income right now for 2020. They only look a year back. So, they don't know that you're not necessarily in the best financial position today. They're looking back at your history. So it's kind of a little bit of a potential out right there.
Okay, so on that subject, we have an email asking, can I request forbearance on a loan if I just recently refinanced within the past 2 months? And then there's a follow-up question, which I believe you've answered, but couldn't hurt. And are there any cons to applying for forbearance in general?
So the answer is, selfishly, that would be a problem if we wrote the loan. However, if we didn't write the loan, yeah, you could do it. It won't adversely affect you. The general rule is the forbearance is not supposed to hurt your credit, and that's kind of the precedent set. As long as your loan was already sold off to one of the agencies, and again, just Google it. If it's sitting with Fannie Mae or Freddie Mac or FHA already, which 2 months might be there already, it won't hurt. The only person that it hurts is the lender that wrote your loan initially.
Gotcha. And we did get some input through the chat on the YouTube channel from a member of our shill, and this wasn't a question. I don't think it needs to remain anonymous, because he kind of introduced himself at the beginning. Gerald Meyerhoff, who's a CPA, just back to what we were talking about with the student loans, points out that if it's a federal student loan, it's probably pretty easy to get a deferral on that as well. Also, I would say just by picking up the phone, which seems to be a running theme, pick up the phone, call the debtors, and take care of it that way, or the lenders. So another question, and this was pointed to Steve and Michael, but really I'm sure all three of you might have experience in this. Are there any apps that you can recommend for bill management or budget management? All right, sounds good.
The one that, this isn't for my legal profession, Mint is a budgeting app that's I think probably the most popular one. It actually is free, and and all your accounts get uploaded into there, and it's a helpful budgeting app.
All right, Steve, do you know of any?
I don't, but can I throw something in that I forgot to mention before that might be helpful to our viewers? If anyone
Now's a great time.
has any kids who are in school, and part of the reason you're in financial stress is because of Jewish school tuitions, I recommend that they apply for the the school choice type of programs, that a lot of the tax credit programs and the other new program, because a lot of schools, because of the coronavirus, that would normally compete for those dollars may not be opening up again. So it may be more liberal in terms of the amount of income they need, and because of everything that's going on. So I'd recommend, if you at all think you might qualify, apply for it, because that could mean, substantial dollars towards your Jewish education.
All right, and in the chat on YouTube, Danny Kalblum recommends Truebill. The app. Have any of you used that? We have Mint and Truebill as our recommendations. All right, if you thought we were done with forbearance questions, here's one more. Even if you don't need mortgage forbearance, is there any reason not to request it from your lender just to improve your cash position in the short term? Other than, obviously, Aaron, if you were the lender.
Only 3 months, by the way. After 3 months, do whatever you want. But that's it. No, the only thing that it might adversely affect you is for new credit. Again, it might not necessarily affect your credit score, but it might affect your credit overall. So that if you went to apply for a loan, let's say a commercial loan or an SBA loan, or potentially a car loan down the road, a lender that actually not only just pulls your credit score, but actually studies your credit report. So it has to be generally something substantial. They would see that you went into forbearance, and that could be a problem. So there could be what we would call in the banking world a credit overlay for that. So they might price your rate up. Instead of, if the baseline is 4%, they might give you 5% because you're considered a higher risk type borrower. Even though your credit score is okay, your credit history is really somewhat dinged.
One other thought on that, which is sometimes if you request the forbearance early on when you don't need it, if it comes around that you do need it at some point in the future, it may not be easy to get one again. So if God forbid you lose your job in 6 months and then you really need a forbearance, you may have already used up your forbearance when you didn't need it early on. So something to keep in mind as well.
And
In other words, save that forbearance for an actual rainy day.
Right.
Exactly.
I'd say a practical concern is if you don't really need it and you're afraid the money may disappear by the time you do have to pay it in a few months. So you have to know yourself.
All right, we do have another app recommendation, and I think it might be the same person who WhatsApped it to me and posted it in the chat, but it's called YNAB, which is an acronym for You Need a Budget. YNAB comes highly recommended from at least one or two of our viewers. And I have one more email. No, I don't. I got an email and then I got a follow-up email saying, ignore that question. So that means I'm out of questions and I don't have any personally. So of course, if anyone else wants to send in some questions before we're totally done here, if you have me on WhatsApp, you can send it to me that way. I already gave out my email address. I'll give it one more, and I have my email open while we're doing this webinar, so I'll see your email when it comes in. It's avi, A-V-I, at yih.org, YIH as in Young Israel of Hollywood, avi at yih.org. But before we, and like I said, if we do get any questions while we're still going, I'll jump in and ask, but can I get some closing thoughts, something to leave us with from each of you. And I started with Aaron last time, so let's go to Michael now.
What I recommend to anybody who's facing some financial difficulty and has uncertainty is to ask, is to not be afraid to go to a professional, to go to, Aaron, Steve, me, come and ask us a question and get guidance. Don't just go online. Don't just go on Google or Reddit and try to figure it out there. I see, as an attorney all the time, I represent people who have to file for bankruptcy, and people will go online, read a couple of things about bankruptcy, make some financial decisions, which end up harming their case. So it's very important that if you're facing a difficult time, you're not sure what to do, there are a lot of resources through the shul, through this group, through other aspects of the community. Don't be afraid to ask. There's definitely somebody in our network who can help you.
All right. And I did get an email, another app recommendation, Trim. And I guess that has something to do with trimming back your budget a little bit. Steve, any closing thoughts for our viewers?
I just wanted to reiterate what Aaron said, which is how important it is to communicate with the people that you owe money to, especially if it's a bank, especially on your house. I had an experience recently where in my business we were paying rent, and it's just such a difference if you approach them proactively and explain your situation. You don't necessarily have to make any concessions, but it's so much better than hiding, and it just creates a much better setting to settle it in an amicable way. So other than that, thank you for having me, and I hope if anyone has any further questions, please contact me.
Yeah,
And Aaron?
just to add on what they said, this cycle, it's not really anyone's fault. Last cycle you had a loan, a mortgage that was, you refinanced, you took out 98% of all the equity of your house and you went and spent it in Vegas. This cycle, it was a totally unforeseen, unrelated to credit to anything anyone did. So, lenders have been a lot more amicable and forthcoming and, communicative than they've ever been in any financial situation. So again, don't be embarrassed about it. Same thing, communicate. And lenders themselves are not taking it personally. Whereas last cycle, I think there was definitely some hostility.
Okay. I also want to hit home the importance of the communication, but a slightly different kind of communication. Not the communication with the lenders, with the people who hold your debt, but communication with the shul. If you're in need, there have been people who have generously given money to a COVID-19 recovery fund in our shul, raised a decent sum of money, and it's there to help. If you call Rabbi Weinstock, you call Rabbi Freiberg, even if you call me, but I'm going to end up handing you over to Rabbi Weinstock or Rabbi Freiberg. They don't let me sign those checks, but it will remain 100% confidential. No one will know who this money is going to except you and the rabbi. And the rabbi's not going to say anything to anyone. It is one of the highest levels of tzedakah, the ability to give and not know to whom you're giving, and to receive and not know from whom you're getting it. So to those of you who are not in financial distress and have the ability to help, if you open up your computer browser and just go to yih.org and you click donate. Now, if you happen to be logged into your account, you won't see this, but you'll see it says payment is for your account balance or for a donation. If you switch it to a donation, you'll see this. And if you're not logged into your shul account, I believe it'll just go straight to making a donation. And there's a drop-down menu for type of donation that you're making. So if you scroll down to charity fund, one of the subs under charity fund is COVID-19 recovery fund direct. You make the donation, that money goes direct into that fund. None of it goes to administrative costs or anything like that. All the money is helping people who are suffering at this time. So whichever side of that coin you happen to be on, communicate. Communicate with the shill that you want to help. Communicate with the shill that you need the help. Either way, it's going to be 100% anonymous. And I hope that people will take advantage of it if they need it. Just one more note in the chat that Gerald reminds us that the PPP loan applications need to be completed and money received by June 30th. Many people with a full-time job and a business on the side can still apply for the side business, and he's offering to help with these. So Gerald Meyerhoff, one of the very capable CPAs in our shul and our Gabbai Rishon. Thank you, Gerald. And thank you to our panel.
Thank you. This was better than summer camp. So
I beg your pardon?
this was better than summer camp. So.
Better, not my summer camp.
Not for me.
So Michael, Aaron, Steve, thank you so much for being with us. Again, if anybody has any questions after this point, you know how to reach me, you know how to reach the shul. There are so many people who can help and want to. And those of you who are able to help, add yourselves to the list. We'd love to have it. Everyone, have a good night.
Thank you, Avi.
For joining us tonight.
Good night.
All right, we are no longer